Why every independent contractor needs a solo 401k plan. Hey, it's Adam Bergman, tax attorney, founder of IRA Financial. So if you're self-employed, if you're lucky enough to have your own gig, even if you have a full-time job, but you're able to make a little bit of money on the side or maybe a whole lot of money on the side, then guess what? You have the ability to really maximize your retirement benefits. And listen up, you have the opportunity to maximize the best retirement plan available. And it's called a solo 401k plan. It's awesome. And not only do you get to do your own thing, you probably have your own retirement plan, maybe at work, maybe at not. You can have your own healthcare plan, but the solo 401k will let you do a couple things. Now, 2021, you can put away $58,000. Okay, it's a lot of money, right? $58,000 or $64,500 if you're over the age of 50. Okay, so you can put away a whole lot of money, pre-tax or Roth. There's two components. There's the employee deferral, which is $19,500 or $26,000 if you're over 50. Okay, and then there's the profit sharing of 20 or 25% if you have a C or S corp. So you can maximize your benefits, and you can even have a solo 401k if you have a full-time job. So let's do a couple examples, right? You now have a job, let's say you work at Apple, make $100,000 a year, okay? And you put away $15,000 in the Apple 401k. And now you have your own side gig. Let's say you sell stuff on Apple, you have your own Shopify, you do tutoring, consulting on the side, whatever it is. Okay, let's say you make $30,000 on the side. Okay, you're under 50, 1099, right? Before I jump into all this, who can set up a solo 401k? So you need to have a side business, just no full-time employees other than yourself or another partner or the spouses of the owners. That's it. So it doesn't even have to be a full-time gig. Side gig, just have any full-time employees over 1,000 hours that are non-owners. So once you're eligible, again, you make 100 grand, you work at Apple or Tesla, put 15K into the 401k, you make $30,000 now. What can you do? So you have, again, you're under 50, you have the difference of the 19.5 and the 15K. So you can do the difference of 4,500. And then you can do 20% of the 30,000, okay, times the 20% gives you another 6K. So you can put away another, out of the 30, over 10K. So instead of having the revenues and the taxes go to the IRS, it's now being deferred into your plan, whether it's pre-tax or Roth. If it's pre-tax, you get a tax deduction. If it's Roth, you don't, but the funds grow tax-free. So if you maximize, let's say you worked at Apple and you put in the full max, it's okay. You can still do the 20% of the 30 or the 6K. So you get to add a little bit of more funds into your retirement plan. You can roll IRA or 401k funds into your new solo K. There's a loan feature that lets you borrow up to 50K, tax-free, penalty-free. Use that for any purpose. So that's another great option. Best of all, you can do pre-tax or Roth, and you can do alternative assets. So you can do stocks, mutual funds, ETFs. You can also do real estate, cryptos, hard money loans, private business investments, hedge funds, private equities. So the solo K, because you're your own boss, you don't have to worry about employees. You don't have to deal with ERISA, fiduciary risks. You can maximize your retirement and investment benefits just for you. So it's really the most robust retirement plan, and it's for the self-employed. So listen up, you're self-employed, you're lucky. You get to control your life. You probably can get healthcare with Obamacare. And now, because you're watching this video, you understand the powers of the solo K. So the last thing I want to say is you probably have heard about a SEP IRA, right? Everyone's heard about a SEP IRA. SEP IRA is just a profit sharing plan. It's just 20 or 25% of your comp. That's all it is, okay? There's no employee deferrals. So let's do an example. Solo K, you make $100,000. You're, let's say, over 50 years old and you have a S corp, okay? A SEP IRA is going to give you 25% of the 100, 25K. No catch-ups. On a solo K, remember, you can do 26,000 because you're over 50, and you can do the 25K, right? 25% of 100, giving you $51,000. So out of that 100K, you were able to defer, meaning instead of paying tax on 100, you're paying tax now on 100 minus 51,000. Okay, and that money that you're saving, those deductions, instead of going to the government or going to your 401k, which you can now invest in Tesla stock, ETFs, but also real estate, cryptos, hard money loans, private businesses, all of this exciting stuff. The IRA says there's only 2 things you can't do with a solo 401k. Collectibles, like baseball cards or antiques or art. Second, any self-dealing transactions, right? So you just can't do anything that personally benefits yourself or a lineal descendant, parent, child, spouse, daughter-in-law, son-in-law, or any entities controlled by such persons, right? You just can't buy a house and live in it or use your 401k to buy yourself a watch or a car. Otherwise, you can do it, whether it's flipping real estate, holding real estate, renting it, selling it to third parties, cryptos, and so on and so forth. Whole world of investment opportunities that you as a self-employed person can do, can control, and also can maximize your retirement benefits by contributing up to $58,000 or $64,500. So not only do you get to control your life, you get to control your retirement future.